This conference will now be recorded.
Okay, so yesterday we talked about manual billing. So manual billing is also considered as one of the category of billing. All in all, we have three categories of billing: consumption billing, and then move out billing, and then we have got the manual billing. Manual billing, as I told, is something where we have to do some activities manually, and also the reason why it is not, why it's called manually is it is something not automatic in the sense, uh, like instance in regular buildings, we have got metering orders created. Metering order will help us to create the what you call the billing order, and based on billing order, we have to create the billings. So it's called automatic billing in the sense the billing is driven because of a billing order, and billing order itself is driven because of a metering order. But in this case, there is no metering order, there is no billing order. We have to create the billing, and as such it is not controlled by any scheduled date. Okay, whereas in the other cases it is scheduled in the sense we are scheduling according to metering what we have done when the billing has to happen. But manual billing is something what you can create at any given point of time. The basic purpose of using the manual billing is to process what you call the credit memos mostly, but you can also use them for debit memo. In general, what is credit memo? Credit memo means basically there are three types of invoices what we normally come across in the business. When you say generally invoice without any additional details, it is something like where customer has to pay the money. Okay, customer to pay the money. That means you will provide an invoice. Once you provide the invoice to customer, based on the invoice amount, the customer will make the payment according to terms of payment. Now, credit memo is a also one kind of invoice, or you can say it is a bill by which company pays money to customer. Company pays money to customer. That means because of certain reason we are refunding some amount or giving back some amount to customer. In that case, we call it as credit memo. Credit memo is an invoice by which you are actually crediting the amount to contract account. Whenever you create invoice, amount is debited to contract account. So basically the effect here is it is debited to contract account, and here it is credited to contract account. But the difference is when you say credit memo, normally credit memo will have a reference document. That means you already have done the billing, you already done the invoice. With respect to that, you are preparing credit memo. That means you just don't create a credit memo without any reason. The reason is you already done some billing and invoicing. In order to do some adjustment, you are preparing a credit memo so that company will pay the money back to customer. So it is always with reference to reference. And then you also have a debit memo. Okay. Debit memo means we are basically over and above what we already given the invoice, we want to add some additional amount to customer. That means we are asking customer to pay over and above what we have already asked them to pay. Okay. That means an invoice is already given, but based on this invoice, we want to debit again additional amount to customer. Additional amount to customer, in that case, debit. But in case of SD, what happens? The reference is the invoice. Okay. In case of SD, we are creating invoices. So credit memo is made reference to the invoice, or it can be sales order. There are so many references are there based on which we process the credit memo or debit memo. In case of ISU, we are not directly creating any credit memo or debit memo. We are first preparing the billing document. Okay, the manual billing document. This manual billing document will refer to previous billing document line items. Okay, that means I'm creating a billing document, manual billing. So naturally, when you do the billing document, you will refer to a previous historical billing document. Refer to previous billing document, and in the billing document, you have one or many line items, and you can copy whatever items you want to correct or make some additional adjustment. So let us say in a particular billing document, there are 3 line items. I'm referring to that billing document, preparing a credit memo. I will copy only that data which is going to reflect in credit memo processing. That means you can refer to complete quantities, complete line items in the billing, and then process the credit memo, or you can do partial reference to the line items, and then based on that you'll make the credit memo or a debit memo. So basically you are preparing a billing document either as a credit back billing or a debit back billing. Okay, after the manual billing is done, a document is prepared. Okay, billing document. So you prepare a manual billing document and then save it. By default, when you save it, it is blocked for billing. Okay, blocked for invoicing. So there's no system, there's a system defined control. The moment to prepare the manual billing document and then save it, it is blocked for the invoice. So now in the change mode, we have to release it. Okay, which means somebody has to check the manual billing, why it was created, either as per the policy, and then after all the proper verification, the particular authorized person will do the release of the billing document. Once it is released, it will go for the invoice preparation. That means we are not directly creating credit memo or debit memo. It is happening through billing. And billing itself is referred to previous billing documents. And based on that, either you can do a kind of a back billing credit memo or a back billing debit memo. Okay, that's the basic purpose of the annual billing. In our present installation, we have created 2 billing documents purposely so that we could refer one of the billing document to see how we can make a credit memo or how we can make a debit memo, and then what will be the effect on the contract account. Now, one thing we should remember, in the case of manual billing, we are not adjusting any meter reading. We are not adjusting any meter reading. We are only dealing with the price and the quantity. Price only, not even the quantity. Where quantity means meter reading. Okay, we are not adjusting meter reading. We are only referring to the price changes, and based on that, the manual billing will happen. The same activity you can also perform through so many other methods like adjustment reversal, or you can say billing reversal. So those things will come up in future. Okay. So the purpose of manual billing is we can prepare a billing document for providing a ultimately credit memo or a debit memo. So now let us take our installation. What we have, ES31 installation created for division 60. The last installation is 227, what we have created. In this particular installation, we have done the billing for month of November, and we also done the billing for December. Okay, sorry. Uh, End of November, we have done one billing. End of December, we have done one billing. So the billing document is 2306. The billing period is 01/11/2019 up to 29/11/2019. Okay, that is the original billing period, and the billing document is 2306. So this will be our reference document. Now we want to make a ultimately credit memo to customer. Let's say we want to return back some amount at the rate of 2 rupees to customer, at the rate of 2 rupees to customer. That means we have done excessive billing with some price which needs to be adjusted with 2 rupees at the rate of 2 rupees per kilowatt hour. So we are making a credit memo. So how to process it? So first go to manual billing transaction, go to billing, and then billing execution. Then we go to manual billing. So manual billing has got a separate transaction, EA16, create. And also you must know what is the contract for which we are doing this. So our contract here is 225. Current contract is 225. Contract is 225. You must know the contract because you want to copy the billing document of that particular contract. So go to EA16. The contract here is 225 and key date we will put it as 29/11/2019 and then copy the proration, provide the billing document reference. Billing document reference here is 2306. 2306 is the billing document. Enter the contract, key date, billing document reference, copy the line items, and then continue. Now it will show in the original billing document, there are, two line items, okay? One is about the quantity and one is about the price. So we will select both the lines and then transfer. Transfer these lines to manual billing. So again, in the manual billing, there will be two line items, okay? Valid from 31/10/2019, but this is actually valid from 01/11/2019. And the sub transaction is 0021. Originally in the billing document, it is 0021 and the quantity is 580. Okay. Now we go to line item number 2. In line item number 2, we will see the quantity is 580, valid from 01/11/2019. The original sub transaction was 21. Okay. Now we want to make a credit memo. So if you remember, in our rate definition, we had two sub transactions, 0021 and 0011. 0021 is basically debiting the amount to contract account and 0011 is going to credit the amount to contract account. So we are interested in making a credit memo. That means we want to back billing credit. So you have to make your sub transaction as 0011 and original price amount is 12 rupees. We want to return back the money to consumer at the rate of 2 rupees. Enter price amount as 2 rupees. Now automatically system will calculate the amount as 1160. That is basically 580 is the quantity into 2 rupees. That is 1160. But you can see it is showing with a minus indicator. Minus indicator means this particular amount along with the tax amount will be credited to contract account. So far, when you go to the account balance, we have seen only debit entry. Of course, when you enter the incoming payment, the amount is credited to contract account. But here we are making a credit memo. That means this much amount we are refunding back or giving back the amount to contract account. So once you enter 011, because 0011 has been marked for the credit posting as a sub transaction, the amount is showing with the negative indicator. This is the amount what we have to return back to the consumer with the tax. So tax will be added in the invoice level. So we will now save it, save the billing document. The manual billing document 2308 has been created. This is a billing document what we have created. Now it is in the blocked condition. It will not be available for the invoicing. So we will go to change mode. Enter the billing document what we have prepared. It is 2308 and then enter. Here manual back billing, release for invoicing. Okay, we are releasing the particular billing document for invoicing, release. Save and release the document 2308. Yes. That means unless you release it, it will not go for the invoicing level. Now that we have done the reversal, basically we can go to invoicing, go to EA19 and the document date is today's date. You can say reconciliation key 60 17 01 2020, and the contract account is 5301. Enter and then execute. The reconciliation key is not there. We will create yes. Now it is referring to the latest billing document 2308, which is available for the invoicing. Now we will say continue. Now it will prepare the invoice, and invoice amount will be 1160 into 12% as a tax. Okay, the invoice amount is 1276. That is basically 1160 into 1.12. Our tax is 12%. So it comes to, okay, 10% is the tax. So 1276 is the basically the amount. That means 1160 into 10%. Rate of tax is 10%. So 1276. But it is showing with a minus indicator. Now, if you go to environment and display document and then contract accounting document, it is using now a sub transaction 0001. Okay, it is using the sub transaction 0001 by which the amount is credited to contract account. So 0001 and 0002 are two very important sub transactions what we have assigned it to the main transaction. So if you go to the assignment of the main and sub transaction, if you go to IMG and then go to financial accounting new and then contract accounts payable and payable, basic functions, postings and documents, document, maintain document assignments. So here we have got maintain transactions for ISU, then maintain transactions for billing. Here our main transaction is 300. Along with this sub transaction, we have assigned it to our company code and the division. Now, what is the implication of 0001 and 0002? So 0001, 0002 will be there in every assignment, whether you do consumption billing, manual billing, or end billing. You will always find out 0001 and 0002. But what is the significance? We will see. So our company code is 6000, 60 is the division, main transaction 0300. Okay. We have defined 0001, 0002 assignment 10, 11, 20, 21. These sub-transactions are relevant in the case of rate definition. So in the rate, we can pick the 21 or 20 or 10 for the debit transaction. 11 is for the credit. Okay, that means the sub-transaction amount has to be credited to contract account. But 0002, 0001, if you see and then see the details, it is marked as credit. Okay, and this main transaction 0300 has been assigned to internal main transaction 0300. That means when you prepare the billing document, if the main transaction is 0300 internal, it means you are basically posting a manual debit memo or a credit memo. Okay, so the internal transactions actually define why you are preparing the billing. Okay, this is our external definition for account determination. Okay, but 0300 is system defined main transaction, internal main transaction. If any FICA document has been posted with the internal main transaction 0300, it means it is manual billing. If a billing has been posted with 0100, it is consumption billing. If it is 0200, end billing. So internal transactions basically define the nature of billing what we are doing. These are system defined. They are coded actually. We cannot create our own internal main transaction. But our external main transaction is assigned to internal main transaction. And here you can see 0001 is the external main transaction, which is marked as credit. That means the summarized value of the invoice will be credited to contract account. But suppose if you are making a debit memo, then it will be 0002. So if you see here, it is marked for the debit. Suppose I want to debit some amount to contract account to collect extra amount. In that case, the summarized value from the FICA document will be debited to the contract account. Okay, so this is a basic understanding of the assignment here. Now if you go to the what do you call?
Sir,
Yeah,
sir, whereas when we are creating billing document, their sub transaction was showing 0011.
that is for the sub transaction. That is a line item. In the billing line item, when you create that line item, you have to credit or debit. Okay, but there
Acha,
can
that
be
is not for
summarized.
accounting.
That is for
That
determination. That is determination for the GL account. That is basically for the revenue account. But 0001, 0002 are posting the value to contract account. Let us say, for example, you have got two line items in the billing. Okay, billing
yes,
line
sir.
item is 3,000 rupees. If you maintained 0011, it means whatever amount you are creating, 3,000 has to be credited to contract account. Okay. Now 02, you have got another amount which is 1,000 rupees. That is also 0011. This amount has to be credited. So what is the total value? It is 4,000. This 4,000 is credited to contract account. Okay, it is posted to contract account using the sub transaction 0001. That means 0001 and 0002 are controlling the summarized value to be debited to contract account or credited to contract account. But individual sub transaction line items in the billing documents are having 011 or 021. So 011 means this amount has to be credited to contract account. But in the billing document, you have got two line items. So total amount is going to be 4,000. The summarized value is credited to contract account using 0001 as the internal main transaction. It is the 0001 as the main transaction. So basically, this amount will be posted to a GL account. This will posted to a GL account, and this will be also posted to a GL account. So GL account determination will happen. In our case, this amount is having a GL account as 8,520,000. Okay, 8,520,000. So if you go to our display document, environment, display document, contract accounting document. So here you can see 8,520,000. Okay, this is a GL account for the amount, actual line item. This is for the tax. Okay, but the total amount what you are getting is credited to contract account. That is 1160 plus tax 116. Together, the sum total is credited to contract account. This is because of the sub transaction 0001. Okay. So now, if you go to
Okay, thank you, sir.
yeah, now if you go to FPL9, okay, account balance, and if you see here all the items, here you can see the amount is credited to contract account. So far you have done the debit memo, regular invoices, and then now first time you have done a credit memo. So the particular document what you have created is basically 1276, 246 created today. You can see it is showing with a minus indicator, okay, minus indicator, and then it is showing the indicator as open credit, okay, credit is open. So basically you got in the account balance two types of items, open debit items and open credit items. You got open debit items and then open credit items. Open debit items are created when you prepare the regular invoice. Suppose I prepare an invoice and then save it. Amount is debited to contract account. It's an open debit item. Open debit item means it is something to be cleared by incoming payment. Cleared by incoming payment. That means today, suppose I have debited the invoice value as 5,000. It's open in the sense it's an open debit. That means customer has to pay. So it has to be cleared by the incoming payment. Okay. But then we have also open credit. Open credit. So when the open credit will happen, open credit means the amount has to be credited to contract account. You have to actually pay back the money to customer. Okay. So how will you do the clearing? How will you do the clearing the open credit? Open credit can happen because of credit memo or because of something like on account payment. Let's say customer made some payment, but you could not clear the payment against any invoice because you didn't know which amount you have to clear. So it is holding on the contract account as an on account. It's lying as a balance which is not adjusted. Okay, it's called open credit memo. Or down payment account. These are all basically open credits. Open credit means the amount has to be paid back to the customer. But how will you clear it? Okay, how will you clear? If it's an open debit, you are clearing by incoming payment. But how will you adjust the open credit? There are two methods. One is by entering again incoming payment, accounting for the debit balance. Okay, accounting for the debit balance. Now, for example, here, what is the total amount you have to collect from the customer? 14,564, 14,564. But this 14,564 is accounting the sum total of debit and credit minus. Okay, that means if you add up all these items numerically, some are on minus, some are on plus, the total amount is coming to 14,564. So if you enter incoming payment for 14,564, all these items will be credit, all these items will be clear. Or you can also do the clearing by account maintenance. Account maintenance means some of the debit items can be adjusted with the credit items. That means this 1,276 credit item can be adjusted with any of the debit item. Okay, then it will automatically reduced by your amount by 1,276. Okay, so there are different methods by which you can make the credit payment. Suppose let us say there are no debit items, only credit item is there, which means we have to pay the money back to customer. We cannot adjust with any debit items. Then you can make the outgoing payment. Okay, you can make the outgoing payment. That means you can pay the money back to customer in the form of a check or direct bank transfer. Direct bank transfer. That means suppose we have got nothing to be received from the customer, we have to pay in turn 1,276 to customer. So how will you make? You can make it as an outgoing payment either by cash or by check or by bank transfer. Okay. That means you can transfer the amount directly to the customer's account in the bank. Okay. But here simplest method is if customer makes the payment of 14,564, all these items will be cleared, including the debit items and credit items. So now we will do that. We go to FPCD. Our company code is 6000. Value date is 17/01/2020. Reconciliation key 60/17/01/2020. Currency INR. And our contract account is 5301. Now if you select the items, then you will see total amount what we have to clear the amount to the customer is 76568184 debit items and 1276 the credit items. Some amounts were reflected as a credit, they are incoming payments, they have been already accounted. So this is a total sum total of the amount what you have to collect from the customer. Double click. So the amount customer has to pay is 14,564. So we will enter 14,564. That means we are clearing open items worth of 14,564 post. That means we have cleared the amount with the contract account. So if you go to the contract account and then see, there will not be any open items. There is nothing to be cleared. All debit and credit amounts have been adjusted by the total incoming payment. So if you go to FPL9 and then see open items, there will not be any open items because everything has been cleared. No items are selected. But if you select all the items, then it will show all the items that have been cleared, both debit and credit. So at the moment it is 0. These are the ones which are showing in the green color, which means they are cleared. You can see 12676 is adjusted with the debit entries. So these are the clearing documents which have cleared the amount, and the total amount to be received from the contract account is 0. Okay. So this is how we do the adjustment with the contract account. So the purpose of manual credit memo is to refund the money back to contract account. Suppose let us assume we have done the billing, but you have to charge the consumer with some extra amount. Then we go for debit memo. Okay. Then in that case 0021 is a subtransaction. Now let us see, we have got an existing billing document. We want to make a debit memo. So go to billing periods and then go to document. We have a document which is basically 30/11/2019 to 27/12/2019. So our periods are 30/11/2019 to 27/12/2019. This is a billing period, and the billing document is 2307. Our billing document is 2307, and contract is same. The contract is basically 225. So let's see how to make a debit memo to the contract account. So again, go to EA16 to prepare the debit memo. Manual billing, create. Our contract is 225. Contract is 225, and our reference billing document is 2307, and our key date is here 27. Key date is 27/12/2019. Our key date is 27/12/2019, effectively from 30/11/2019. So now we will say continue, copy the line items and adjust the period as basically valid from 30/11/2019 to 27/12/2019. The quantity what you have done the billing is 620. Okay. Go to second line item. Again, adjust the period. The period is 30/11/2019 up to 27/12/2019. Now here the quantity is 620. Now we want to charge the customer with 1 rupee extra for debiting the amount, because I indicated the customer for all the previous billings what we have done, our price was wrong, and we want to make the price adjustment by debiting 1 rupee extra. So for that, the sub transaction is 21. If you want to debit the contract account, 21. If you want to credit the contract account, 11. Okay. But here you want to debit the amount. So we want to make the price change as 1 rupee. So right now it is taking at 12 rupees, but I'm making it as 1 rupee. So then 620 is the quantity, 620 into 1 rupees. So 620 is the amount we are going to debit to the contract account, plus the tax. Tax will happen in the invoice. So now we will save it. So the billing document 2309 has been prepared. Okay. Billing document 2309 has been prepared. Now billing documents are always in the blocked condition. We have to release it. So go to change, and our billing document is 2309, enter, and then manual back billing, release for the invoicing. Okay, release it, save it. Now we will go to EA19 and then reconciliation key 60 12 60 17 01 2020, contract account, execute, and then present billing document is 2309, continue. Now you can see 620 into 10%, that is basically 682. 620 is the net amount, and then on this we are adding 10% tax, so it comes to 682. Now 682 amount will be debited to contract account. So if you go to the contract accounting document using 0002, it is debiting the amount to contract account 682, and 8,520,000 will be credited, tax account will be credited, and contract account, if you are debiting, it will be debited to reconciliation account 1,40,522. That is a manual billing, basically the reconciliation account. So now this amount will reflect as a debit entry. So if you go to FPL9, now you can see a fresh debit has happened, 680 rupees. So if you go to here, all the open items, the fresh amount is 682. That means here the amount has to come from the customer. That is a debit balance what we have got. So you can use the manual billing for doing the debit memo or credit memo. So first you're preparing the manual billing document with a reference to an existing billing document. Copy whichever line items you want to adjust, and all these adjustments will happen in terms of price only, okay, not in terms of quantity, because you're not changing any mid-reading result here, okay, because only when you create a mid-reading order, then you can adjust with the mid-reading result. But here there's no mid-reading order. Directly you're preparing the billing document. So as you can see, we have to do some adjustment in the billing document manually, okay. That's why it's called manual billing. It is not automatic. Automatic in the sense, it is something scheduled. As per the scheduled date of meter reading, it is scheduled to happen for a particular date of billing. But here manual billing has got no date restriction. You can prepare the billing document at any given point of time. It is not bound by any predefined billing order or a scheduled date. It is something which you can do it at any given point of time. So that's why it's called manual billing. If you want to bill it, you can do it. That's a manual billing. Okay. So that is the purpose of the manual billing. So we have seen all the three categories of billing. Okay. That is periodic consumption billing, end billing, and the manual billing. Okay. Now, in all these cases, whether to create a periodic consumption billing or end billing or manual
Sir,
billing, we are doing the regular invoice. That is with the EA19, consumption billing invoice. Yeah.
yeah. Sir, actually, suppose I have given, suppose one consumer has taken connection. It is
Uh-huh.
permanent connection.
Yeah.
Then he then then he closed that connection within a year.
Yeah.
Then
Come again.
he withdrew the connection within a year.
Move out. He is doing move
No,
out.
actually, suppose yeah, he's been moved out
Okay.
within the year.
Okay.
So in that case, suppose if I want to charge any extra,
Uh-huh.
means if I wanted to get some extra amount, so that
Okay.
can be done, sir, automatic.
Yeah.
How it
Automatic.
can be done, sir?
It cannot be done automatically. It has to be done through the FICA. You have to make charge entry. Charges means there's a sub transaction. There's a main transaction 0010. Charges can be
Huh,
levied. That means when you prepare the
huh.
billing document, in billing document you can add only security deposit. But if you want to levy some
Okay.
charges, you have to create a FPE1. You have to create a charge document. You can go to FPE1
No,
if you want to
sir.
debit.
Actually, my question is, whenever he'll be going to move out,
Yeah,
that time I have to post some. I have to charge some extra.
I got your point. But you see, you want to charge the extra amount means you require a charge schedule, okay? But that control will not come from
But
the,
the same, sir. The same debit memo or like
that's what.
the same. Huh.
For that you have to go to FPE1, okay?
Okay.
Post
Okay.
a FICA document. You can post a FICA document. You can have a sub transaction created. You can have a main transaction as something like, the sundry receivables or the extra charges to be levied to contract account. And then you can enter the main transaction and sub transaction. For example, here I'm want to debit some contract account. So I'll give some reconciliation key, and then I go to specify the currency, INR, and I go to company code, my company code. In our system, we are not defined this manual figure document. So let's say
Okay.
555, contract account document for company code group 555. So let us say this is a contract account. The main transaction is 5,000. The sub transaction. Now I got sub transaction as price for product, installation charges, packing and forwarding, consultancy charges, credit memo. You can add one sub transaction as extra charge we have to debit to contract account. That is for the move out billing. Then we can select that particular sub transaction, and then we can add the amount, how much amount you want to charge. Let's say 2,000 rupees. And then you can post it, you can save it. It will debit the amount directly from the contract. So the additional charges, what you want to do, it has to be done through a manual FICA document. You have to do FP1 transaction. You must maintain sub main transaction and sub transaction. Based on that, you can do that.
Now, actually, this will be posted like a credit memo or debit memo.
This is a debit memo because all our sub
Yeah, yeah.
transactions
This
are
will be this will be posted like a debit memo, no, sir?
debit. Yes, yes.
This will show on the display the billing documents.
Yes, yes. It's not actually billing document. It is a direct
No,
posting to.
it is not a billing document, but it will show on the documents list, no, sir?
In the account balance, it will show. This is the amount you have to pay extra.
No, no. In the billing periods, is it
Ah.
same will show in the documents list?
Yeah, but you see, you're not doing the billing actually here. You're
We
directly
are not
posting a
doing any
FICA
billing,
document.
but no.
You're not doing billing and invoicing. You're directly posting a FICA document. You can send this
Yes,
statement to contract account. This amount you have to pay for the move out you are done within 1 year. Okay, like that. Because
okay.
in move in, move out, we don't have any extra charge, schedules. You can, at the most, you can only maintain security deposit. This is the reason why security deposit is used. Okay, security deposit
Yes, yes.
means the purpose is to adjust a security deposit for all such things. Like if customer did
Ha,
not
ha,
pay, or if they do move out more less than 1 year, if any such
ha,
things
ha.
are there, you can post a charge amount. Okay.
No,
Or
actually, in our currently in our system, no, sir.
ah,
We won't, for temporary connection, we won't charge like anything. But for
okay.
permanent connection, if we take connection for
Yeah,
permanent,
yeah,
then if
yeah.
we withdraw that connection within a year, then the debit memo will be posted for that
Yeah. So
automatically.
you can also have a debit memo created for this particular transaction. You can use a manual billing to debit because it will appear as a billing document. That means you can have a sub transaction included in the rate, and you can use it for calculating the extra amount to contract account. That means 0300 is the main transaction, and then for 0300 you will assign a new sub transaction as let's say 1000 as a sub transaction. This sub transaction you will make it for debit entry, and you define the definition as extra charges for premature premature move out, for premature move out. So then you can have this sub transaction picked up in the your transaction, and then based on that you can post it. That means in the
Sir, but here
definition,
we didn't put in any period and all, no, sir, in
huh?
FP1. For
FP1
period.
FP1 is basically direct posting to FICA. That means you can specify on which date you want to post. But suppose if you want to come through ISU billing, now FP1 is meant for adjustment purpose. It is basically used for FICA document posting directly. But if you want to
Okay.
come through the billing process, ISU, then
Yes,
you
sir.
can add one particular sub transaction here. Go to contract account receivable and payable, go to basic functions, and then postings and document, and then define the document assignments, and then maintain sub transaction. So here you can select application area R, main transaction 0300. I'm adding my own sub transaction. Sub transaction is 1000. This is for extra amount for premature move out, for premature move out, and then save it. So you have to assign this particular main transaction sub transaction to your company code. So go to maintain transactions for billing, and then go to new entry. Our company code is basically 6000. 60 is the division, and then more charges, more, more charges. And our main transaction is basically is 0300, and 1000 is the now it has debit. Okay, this debit transaction. So now you can save it. You save it. That means your sub transaction is appearing to 1000 as an extra amount for the sub transaction. Now you can use this particular transaction to do the manual billing. If you go to manual billing, it will appear, but you have to include in the rate also. In the rate, you can include that sub transaction. For the regular move out, if charges are zero, you can leave it. But if the customer is moving out within the stipulated period, you can enter the amount in the rate. The rate itself, you can add the amount, and then you can do the billing. So this will come
Yes,
to the
sir.
billing process. If you want to do FP1, manually you can post figure document. If you want to come to the billing, you can include a new sub transaction. And for this sub transaction, you have to maintain one GL account. Okay.
Sir,
So
when
you
he's
can go.
moving out within the not in before 1 year, in that
Ah,
case, I wanted to do debit memo for only 6 months.
yes, yes. Then you can ask the ABAPer to write in the rate if statement. If the data move out and move on is less than 6 months, this line item has to be calculated. In the if statement, you can put in the rate. You can ask the ABAPer to put a
Achha.
if rate, and then based on that, it will see the condition, and then based on that, you can do the charge amount automatically. If the move out is happening more than 6 months, then you need not charge. But if it is happening less than 6 months, the system has to calculate the extra charges. It can be done. But you have to ask ABAPer to
Okay.
include a if statement in the rate. They will do it.
Sir, that if statement functional consultant cannot be created in the
No,
billing schema, sir.
it is a job of the technical consultant to clear actually. Because if and else if statement you have to check the integrity and then you can put it.
Achha.
Yeah.
Okay, okay. Thank you, sir.
Why don't you see your rate what they are using? You have a sandbox system or you got a quality assurance system?
Sorry, sir.
You are using
Sandbox.
in sandbox system or quality assurance system. You see the rate how they have created. Then based on that you will come to know what adjustment they
Yeah.
are doing.
Actually, that has been hidden, sir. The period also, whenever I see the debit memo, no, sir. Actually, there
Mm.
no, I'll get the same periods. I won't
Mhm.
get. They have manipulated the period also.
No, if you check in the rate, if you go to sandbox, because in
Ha
display
ha.
mode, there you're not changing anything. Or if you go to
Yes,
quality
yes,
assurance system, you got a login into quality assurance system.
yes, yes, sir. I have.
In the quality assurance system, you can log in, you check the rate. In the rate, you can see they might have put some if statement.
I'll check, sir.
Now you check. Yeah.
Yes. Thank you, sir.
So now we have seen all the three types of billing. Now moving forward, we'll be starting working on the budget billing. We'll be starting with the budget billing. Basically, in case of budget billing, we have got three scenario. One is called partial budget billing, and another is called the statistical budget billing, and the third is called payment plan. Now, usually in the case of Indian scenario or most of the other countries, there's no budget billing. Okay, but budget billing is something very popular in Northern America, in Europe, where the budget billing acting as a alternative to consumption billing. So basically, in the case of budget billing, if you are opting for the contract account for the budget billing, then for certain months we will not be doing any meter reading and billing. Directly we'll be preparing the invoice. That invoice will be prepared with reference to a budget billing plan. For example, if you take your contract account, what we have got, CAA2 5301 is our contract account. In the contract account, we have got the budget billing procedure as 0. Okay. So if you maintain 0, that means we cannot have any budget billing plan created for the contract account. So if you select any of the other options, 1 or 2 or 3, then you can implement for the contract account one of the budget billing procedure what we have. That means if you maintain 0, you cannot do budget billing because you cannot have a plan created. Okay. But if you include in the contract account any one of these procedure, either 1 or 2 or 3, then a plan will come into picture. The plan will contain the equal amounts. Okay. But usually when you say budget billing, it cannot start straight away. It has to have a at least 1 month of previous month metering and billing. Okay. Suppose let us assume we have done the metering and billing in the month of December 2019. Okay. Actual metering was done and the billing was done. Now, customer has agreed for the budget billing from January 2020 till November 2020. We are not going to do any metering no meter reading, and no consumption billing, no consumption billing. Directly will prepare a invoice which is called budget billing invoice. But what is the amount you want to invoice to the consumer? So there will be budget billing plan document will be available. According to plan, it says you have to pay 11 amounts, equal amounts, starting from January to November. And these amounts are going to be, let's say, 7,000 rupees. That means every month on a fixed date, 25th is the date. On 25th, you will prepare the invoice for 7,000 rupees for the contract account. And the contract account will pay this amount for 11 months. So it means from January to November, there will not be any meter reading and billing. Directly, you're preparing the invoice for a fixed amount. That amount is calculated in the budget billing plan. Then again in the December 2020, we will do the meter reading and billing. Then we come to know how much actually consumer has consumed and how much is the amount you should have collected. Okay, let's say 7,000 into 11. Okay, we have collected so far this amount 77,000. Okay, but when you did the meter reading in December 2020 minus the meter reading in December 2019, we come to know the actual consumption, how much consumption has happened. For that, what is the quantity, and then what is the amount customer could have paid, and then based on that, the amount is coming to 82,000 rupees. That means we have already collected the 77,000. So when you do the meter reading and billing in the month of December 2020, it will find out how much amount has been already debited. The fresh debit has to happen for 5,000 rupees. Okay, that means it will debit 5,000 rupees to contract account because actually they have consumed more than what we have estimated. Okay, but if the actual based on metering and billing, the amount is coming to 75,000. Okay, then we are creating the amount to contract account at the rate of 2,000. That means budget billing is beneficial to both company as well as the contract account holder. Why it is beneficial to the company? Because for the 11 months you are not doing the meter reading. You are not doing any expense for the meter reading personnel. Because in certain countries like US or Europe, the meter reading cost is very high. You have to engage a person, you have to pay the salary to the person. So that is a huge amount what company has to pay out. Okay. But if you go for budget billing, that money is saved. You're not doing the meter reading every month. You're doing meter reading once in a year. Okay. In December 2019 and December 2020. In between, you are not doing the meter reading for 11 months. For all 11 months, you are going to make the invoice based on the budget billing plan. Okay. For the consumer, it is very beneficial also because they don't have to wait for the metering to happen. Invoice has to be made, and then they don't know what is the amount they have to pay unless the invoice will come. Okay, after the invoices come, then they have to make the payment. Okay, but in this case, we already intimated the customer. You're going for the budget billing. Your amount is 7,000 rupees. So now they can make some adjustment with the bank, direct debit. Okay, I mean that's one of the option normally used. That means they can instruct the bank. The company will send the invoice to you directly, and then you can make the payment 7,000 rupees to the utility company. So for the customer also, it is like a budgeted expense. They don't have to wait for the invoice to come and then the amount they have to pay. They know for 11 months they have to pay only 7,000 rupees every month. So this is a logic in behind the budget billing. So it is a kind of an alternative method of invoicing the consumer. But in the budget billing, there are three methods. One is called partial budget billing, one is called statistical budget billing, one is called a payment plan. So all these plans will differ in terms of how the FICA posting will happen. Okay, but for the consumer, it is one and the same. They have to pay a fixed amount every month, but internally when the accounting adjustment will happen, depends on the whether you use a partial budget billing or statistical or payment plan. Okay, so we have to do certain configurations in the system for the budget billing. We also have to do configurations in the what you call the FICA. Partial budget billing is very straight away configuration. Conceptually, it is same like consumption billing. Only thing you are not doing the actual metering and billing. Statistical is slightly complicated because you're using the statistical posting. So far, you have not seen any statistical posting. For the first time, we are going to introduce statistical posting. So what is statistical posting? We will see. So that is another method. Payment plan is a hybrid version. It uses both consumption billing, metering, as well as the budget billing concept. So strictly speaking, it is not a budget billing. Although it is one of the plan, strictly budget billing, there are only two methods, partial budget billing and statistical budget billing. Because in both the methods, we are not doing any metering and billing, directly we are preparing an invoice. But in the case of payment plan, we make a hybrid version. Metering will happen, billing will happen, but when the invoice is prepared, it is prepared for a fixed amount based on the payment plan. Instead of budget billing plan, we'll be using a payment plan. So how to use them in the system, we will see next session. After we finish the budget billing, we'll do next scenario, collective billing. Okay. So that will complete your regular billing procedures. Then you can start working on the smart meter billing. Okay. So you can conclude for today. Tomorrow we can meet. Tomorrow Saturday, are you able to meet? Can have a session. Are you available tomorrow?
Hello,
Hello.
sir.
Tomorrow
Hello, sir.
should have class or Monday we'll meet. Tomorrow is Saturday, no?
Monday will meet, sir.
Okay then, fine. Right.
Yes, sir.
Okay, bye.
Sir, and one more thing, sir.